We're certainly seeing, I'm calling it lockdown 2.0. I don't anticipate it's going to be as bad as lockdown 1.0 because they are making some changes to it. So I don't see a complete, economic collapse like we saw the first time. But we are in the midst of that because we have to wait until we actually get the vaccine. I think the second part that really shows up in the markets, because the markets always look forward. So I think that's why obviously you've seen, rightly so, some really optimistic moves in the market when we got the vaccine news. But we've gotten sentiment in terms of bullish sentiment very high right now. Investors are very bullish. As you know, that tends to be a indicator that you probably shouldn't be as bullish at the moment. So it's not like I think things are going to collapse or anything. I just think that you probably can be a little more selective and look for your opportunities here.
As you've noted, we have had an historic valuation gap. Growth, mostly technology names, not exclusively, but mostly, and value. That valuation gap has never been wider in the history of the modern stock market. It has narrowed recently, in part because people have sold some tech, bought some value. When I say value, I mean maybe even things like energy or domestic small caps. Do you think that trend will continue?
I do think there's a real opportunity there. One is, I'm just a person that believes in some sort of reversion to the mean. Maybe we don't go all the way back, but I do think there's opportunity. Some of those areas, I'll just say, I'm a big, I'll say, fan of some of the banks at the moment. So, it's a longer term play. But at the end of the day, they look really cheap relative. So if you get some economic growth to continue, and obviously with the vaccine, you can see, I guess we can see the light at the end of the tunnel finally. You didn't know when it was going to come before. Now we know it's coming here, at least by next year. So I think that at least makes some opportunity on that side. And even, some of the industrials, I think, actually pharma and healthcare, there's some actually cheap stocks there too.
Yeah, and by the way, cheap promo, but later on in the show, we've got Matthew Harrison on. He's been one of the leading analysts about the virus, the vaccines. You're going to want to hear what he has got to say. That aside, that's coming up later on in the show, Bill. But back to this, we look at the banks. Do you have to be a believer that interest rates are going to continue to rise? I mean, we're still under 1% on the 10-year. It's hard to believe. But do you have to believe that interest rates are going to continue to rise in order to like the banks, or can they succeed even if interest rates get stuck here?
I think you got to believe that interest rates are going to rise over time. They don't have to go up today, but it's going to be tough for them to really get their earnings power back without some sort of rise in rates. Again, they work on the spread and a lot of things, and they're making up for it in other areas, at least somewhat at the moment. The big part, at least in the short run, is if they don't see a bunch of loan losses, which if the economy continues to recover, then they probably won't see that either. So that's that's the short-term boost. The longer-term boost is if the economy continues to recover, you probably just naturally see rates drift higher over time, and that'll be a tailwind.
Shepard Smith here. Thanks for watching CNBC on YouTube.